Welcome to AHA Math and Science. In today's video, we like to discuss the price action of Exxon Mobil or XOM. So here is a chart of Exxon Mobil over almost like 40 years. It's plotted on a log scale and for the adjusted close price. You can see this investment has really kind of rewarded its investor very nicely. And now Exxon Mobil is kind of almost at an all-time high. And it just kind of backed down a little bit from the all-time high, and it's not kind of hovering around the $106. So the question is, where does it go from here? And this is basically the question we try to kind of do some analysis and get some insight. And in fact, we did a similar analysis actually about 2 months ago using trend analysis. So when an investment follows the compound formula, and we can actually plot the price of the investment on a log scale and to see if it actually follows the straight line. If it does kind of follow the compounding formula, then we suspect that we kind of expect this investment should more or less follow a straight line. So when we did this fit using regression analysis, we find actually it's not a bad fit because R square value is like 0.91. When the R square value is 1, that means the fit is perfect. So the R square value is kind of a measure of how good the fit is. So here, the straight line represents a model, and the price is kind of fluctuate up and down around the trend line, which is this middle red line here. But you can also see here that there's plus 2 sigma and minus 2 sigma lines. These are 2 standard deviation above and 2 standard deviation below the middle trend line. And according to statistical analysis, there's a 95% probability for the price to kind of fall between plus and minus 2 sigma. There's only 5% probability for the price to go outside this window. And when it does happen, it will not stay too long. So for example, at here, in 1985, it goes below the negative 2 sigma trend line here, but then it quickly rebounded. And something happened here, which is very similar. During the pandemic, the price really kind of dropped. The oil price really kind of dropped, and it dragged all the kind of oil companies' share price also down. And then eventually the Exxon Mobil kind of recovered, and actually it's a very sharp rebound. So this is really a great opportunity to buy these shares, for a long-term holder. And even kind of not including this quick rebound, even start kind of counting the rebound from the negative 2 sigma line to the present time, that rebound is still very sharp with a very huge slope and in a very short amount of time. This kind of rebound is comparable to here, when it also kind of start from the negative 2 sigma line and the rebound all the way to the trend line. Exact same amplitude, exact same time frame. So now you can see here, it did not really kind of like stay there too long. It's quickly actually dropped, kind of retesting this negative 1 sigma line. And eventually you have a really kind of long bull market. So we suspect something like this will also happen here. So we expect here it's going to also start to drop and perhaps go into the negative 1 sigma line. And this will put us somewhere around like $80 to $90. So this is basically the analysis we did on the March 7th. At that time, you can see that here's more like a close up view of what happened this year for Exxon Mobil. So you can see actually at that time, it's very close. This is around like March 7th. It's very close to the trend line, and then it corrected. So the top it reached is actually around February 10th. That's when the price is closest to the trend line. And then it just kind of went down a bit and then rebounded. But you can see it's now getting further and further away from the trend line. So from the analysis we did here on March 7th, you can see it did not really kind of had a chance to go above the trend line, just kind of hovering around. Now it looks like the trend has become even clear, because even with this rebound, it never really kind of break above this February high. So further away from the trend line, did not really kind of break away the February high, and now clearly it's kind of started to go down again. We suspect it's really started kind of test the minus sigma line. So which is basically the analysis we did on March 7th, kind of started kind of really become a real possibility. So on the big picture, this is what we have here. So we are in a situation very similar to, you know, in the middle 80s, and you can see that it's going to start to have a peak drop and a retest the minus sigma line, and that's going to put the price around $80 to $90. And after that, if history is any guide, this should be a really kind of long-term new bull market for it to show up. So, and if this does happen, this could provide a very nice entry point for long-term holders. So I hope you have enjoyed this video and find the information presented here interesting. Again, your support really kind of means a lot to this channel. So please do not forget to click the like button and also to subscribe to our channel. And thank you very much for watching.